Welcome to the Breakfast Club. My name's Darren Hancock, and here we are, June 1st, once again back at the show. Welcome back, welcome back. Looking for a run up above the highs here. I hope you guys have had a great weekend. I've been gone for a month or so. I'm looking for a continuation to the upside here. I'm looking for a run on these relative equal highs above us. Been a while. Hope you guys have been fine. All these little bull traps, I'd like to see them hold. If not, this big sucker here, I want to see that hold. Let's see where we are this morning. Who we got with us this morning? Byron. How you doing, Byron? I'm doing very well, thank you, sir. How's things with you? Hope everything's fine with you and your family. We may not get this run up here. This looks like a return to the consolidation, but I'm kind of hoping we push through and take out these highs here and start getting back up into here. Excellent. Lovely, lovely. I took a long there. Should have put it one in front of you guys so you could see it. But that's nice. Looking for these equal highs up above us here. Amardeep, how are you doing, sir? It's been a long time. Good morning. I have a oh, that just popped back and took me out of here. I was sitting right in here. That's good. Looking for again the rejection block and then this premium blocks above us here. Wait for us to get a body that closes above here. And so far we've got nothing, so we could get a retracement back into here. I'm looking for a continuation. Again, you're still looking for these equal highs above you, but in order to show we've got these little bear traps I was telling you about, we wanted to see those hold. They did. That last one held right there and then went a little higher. So that's, as soon as it breaks this high, pay yourself and move to break even. If it takes out that high, pay yourself, or that high, pay yourself. We're getting to this last up close candle and its mean threshold. Those are all pay yourself points. Then you have your rejection block above you. So ideally, I'd like to see 9 o'clock take out these highs, see a reversal in here, or 10 o'clock and send this lower again. This is like a pre-market Judas swing type of thing, or kind of pointing the direction I wanted to see it go. So it's not super clean right now, but in terms of clearing out lows and then highs and taking out both sides of the market and then waiting for a new setup to occur. That's pretty much what I'm looking for here. And the key is to wait for your ideal kind of setup. Do you have a setup? Do you have something that works for you consistently every time? We have 4 models we basically use here, and or I use, and lots of people are finding success with it. They're 4 simple not simple. They're 4 models that have like 7 different take profit models you can add to it. So the benefit of getting in on a model is knowing that you have multiple different ways to exit, depending on your personality, really, whether you're a long time holder or just trading internal range liquidity hunts. Those can be delicious little trades, and you can just use take profit model 1 on that. If you don't have them, you'll hear them as we go through here, and you can write notes, make notes, screen capture. I encourage you all to screen capture when you can and make notes. How's things going out there on my deep? So we've got this little high taken out. We're back to this mean threshold, and I'm seeing we're getting a change in direction here. If this doesn't hold here and go higher, I'm looking for this last piece right here, 471. Have a look at that. See if we break that on the downside, then take this, then this little breaker that we have that takes out this little high. I want to see if that gets broken and we use this breaker to go lower again, back inside this range. Or we use this to catapult and go even higher still yet. I'd like to see a turn here. Just see it pop down through here. How are you doing there, Byron? Or Brian. Sorry, I keep calling you Byron. My apologies. A little tap and then keep coming lower. I can tap all the way up into here. Keep coming. All good. Excellent. Apologize for that, Brian. All right, that's good. So far, so good. Let's see if this clears out the bottom here first. Rejection blocks hit. So let's just see if we get a little pop below here and a close. I want to see it closing here, and this whole candle all the way up to there becomes accessible for continuation on the downside. This would be a model 1 right here. This is a model 1. If it trades below that level, which it did, and trades back into it, that's model 1. And because you're at the bottom of your little tiny range here, from there to there, you got to wait for model 2, which is actually breaking through here on the downside, using this as support to continue running internal range liquidity. You pull your fib for a take profit model 1 in here like this, and then you wait for 50%. You pay yourself at 50%. 62%. Move your stop loss to 50. So as soon as you hit 50 there, move your stop loss to break even. Take half your trade off, then scale out 10, 20, 30%, 40%, and then leave the last 10% on to see if it runs lower. So now I want to see is a retest of this. So far it's doing exactly what we said. I want to see it retest this now. And if it runs straight to 62, move your stop loss to 50%. Right there, pay yourself a portion there. Move to 50% now. So you've got Model 1 entry. You don't get a Model 2 yet. So if you do take a Model 1, you are in profit. Half your trade is off. Another 10% is off. So your 60% of your trade is off already. You're just trading internal range liquidity. That may not be enough for you. You may go, that's boring, but not interested. Then that's fine. You're sitting at 50%. So the rest of your trade is all in profit. You're risk-free, and you're enjoying some little snippets of profit here. So now what you'll do next is you'll move right there. You'll move to 70, take 10% off here, and do another drop down to 60%. So you sit just above 60% there. Because 70% is optimum trade into a reversal area, right? And we have a discount box. So if you're using Take Profit Model 2, it's box to box trade. That's this box here where we traded below it, came back, tagged it, went lower. So that's box to box. And as soon as we tag right here at 75%, that is your box to box trade. Take Profit Model 2. You're sitting right there. You're out now. You're done. So that's internal range liquidity hunt all the way down to 70% optimum trade into reversal. You maxed out. You took 50, 60, 70% of your trade is off, and the rest was taken out at 62. So if it goes lower, who cares? That's not your model. Your model is to just trade, take profit here. If you're waiting for box to box, then you'll leave it up higher and you'll just wait for it to finish. So you move to break even, pay yourself at 50% if you want, and then wait for box to box to get hit. That's Take Profit Model 2. So you have to have your own specific rules for each Take Profit model, whatever your tolerance is. Hey, good morning, Hadi. Thank you, sir. Thank you, thank you. Just give 450 a little kiss on the schnoz, all the way down to 443, 444. And that will be box to box. That's premium up in here on the 15-minute. Hit premium. There's no discount here, so you're looking at 50% of this last down close candle if you're looking at the 15-minute area. Don't forget, we have not had this retested yet. So what typically will happen is it will come into this box, just tag the top of it, come back, retest this. And then what we're looking for is to say, have we retested this and have we gone lower? We're just shy of my go, no go zone. Hasn't been hit. So you didn't get your Model 2. You just got Model 1 straight through. So it tends for me to, I tend to think it comes back to these, like this breaker wasn't hit again. So I want to see that get hit one more time. And again, we can run all the way back up into this premium level here before running lower. So when you're that high inside this range, then you have to say to yourself, am I going to take a premium, pay a premium price, and it turn around and continue going higher. So the best place to get in a short then would be right there. This little area right here, 480. If you hit 480 and it stops right there and starts coming lower, that's the perfect place. If it closes above that, comes back, tags it, get out, because that's the indication to go higher. If you don't believe me, just watch. Wait and see. Still waiting for that 50 level. Says 70% optimum trade entry. Hey, that ideal reversal point just keeps bouncing on it. So you doing, buddy? Good to see you, man. She is on the mend, man. She's doing very well. Who would have thought that a lady in their 80s is just get your gallbladder out? There you go. Boom. Done and done. Box to box. So there's your Model 2. Done and dusted. Brought to you by our friends Hell and Yeah. And also our sponsor, Boom. Boom! Okay, so where do we go next, you say to yourself? Where do we go next? So we wait for the next market structure shift, and we wait for this to turn into a no-go zone. And keep in mind, we're coming back and revisiting this old breaker back in here. So you cut through candles, and keep an eye on this puppy down here too. I start to lose this, then I start to get a little more happy if I can start to lose 50% of this. Welcome to the open. What's that, 7 o'clock? No, that's my wake-up alarm. There we go. There's the bottom of it, filled and drilled. Now I just wait for it to close below it. Then unfortunately, we're at the bottom end of this breaker. So these ones are usually great when they're sitting up higher, and then you can catch them to go lower. But when they're sitting right inside the breaker too, you have to wait for the breaker to let go, come back inside the breaker. So you got this breaker with this SIBI would be an awesome place to catch a continuation if we're going to keep coming lower. So just because you see all this stuff up here right now, you're going to say to yourself, what is the market showing you? Right here, it's showing you a 5-minute reversal. So we've got this level right here. It's just been closed below. So that whole area all the way up to here, which is 476, which is this old premium up here. That can get retested and still go lower. Which is what I want to see. I want to see us come down into 434. Turn around, send it back up here, then roll over and see if we get a continuation or just a rollover, come back, roll over and continue pushing lower. So this will be a 9. This could settle low. Ooh, this turn around. This could still make these highs. Could still make the highs. Right now, I'm bearish. We're sitting right in here. Wait for this to pop through here and we'll continue going bearish. If not, I want to see that hold. Send it back up through here. Take out this candle. Use it as support and start moving back into this range again, looking for that model. First Model 2 we were looking for that we didn't get, but you got Model 1. And see if we can start coming back into this area. Then I'm looking for a reversal. Then as you get closer to 9:30, you just wait. And then you got to wait for the chaos to unfold first before you commit to something too heavy. Watch 434. See if 434 holds. This is good. Now see how we've got this now becomes the no-go zone. So draw this out on your chart. There's the 31. Didn't quite get, just drop below 31. Just swept this low here, which is fair enough. That's okay for me. I was looking for this level right here. This immediate rebalance, treat this like a fair value gap. Come down, tag it, and then you want to see it leave to go through it. Now, whether or not we bounce off of here, if this is going higher, I want to see it clear this zone, come back, reuse it, and this candle is support to go higher. If it bounces off of this and starts coming lower, then I'm looking for this to continue coming into the mean threshold of that candle is 428. So I want to see it pop through here now. Thanks for joining me on the Telegram channel while I was away. It was fun. We had some killer trades on the way. Or when I was in Manitoba there, it was stellar. So we're right inside that zone. See how it's continuing on the downside. So you just wait. Half this wick now becomes important. Just watch half the wick. If we lose half the wick, continue coming lower. So that's the no-go zone. So this is model, for this here, it would be a model 4, because we've already extended. Then you come back, so this would be a model 4. I'd be looking for this low to get broken, move to break even, pay yourself a portion there, and you'd be a risk-free trade. So if you've entered in here and you've come back down, the rejection block might be your first payment, and you might move to break even right away. But as soon as it takes that low, that's model 4. Pay yourself there. Pay yourself now, move to break even. It's a risk-free trade. I love model 4. You've seen model 4 so many times. If you're in our Telegram channel the other day, whilst I was away, it was many, many times I kept posting, that's a model 4, that's a model 2, that's a model 1. Model 4 seemed to be the big one. It's regularly hit. So in terms of that small range there, so model 2, or if model 2 could be a model 4, depends on what range you're trading in. Model 2, if this is the small range you're trading in, then model 4. I like to consider a range actually where a premium and a discount exists. That's a small range for me. I always look for a premium and a discount. Otherwise, that's just a model 2 and then a model 4. So a model 2 is defined by, do we have a discount inside this small little range? If it is, it's a model 4. If it's not, it's a model 2 for continuation inside the larger range. So you've paid yourself here. If this rips back against you right now and you didn't follow the rule of pay yourself at the previous low, then you're going to sit there and go, oh, it didn't work. It didn't work. Yes, that's the rule. You must pay yourself at the low, move to break even. So you've got a portion off. And then if it comes back through you, you go, ooh, well, I'm glad I paid myself for the range continuation. So now it would have come back and taken you out. And you'll be glad you paid yourself there now. Because if this clears through here, we're getting back to our area that has been untouched. Now that may not suit your trading style. You may go, that's bullshit. That's fine. And it's important that if you dispute it, then it's important to note that your psychology of trading isn't around super sniper. taking out immediate lows and then paying yourself real quickly. You may be like, I'm not into this grabbing little nickels and stuff. That's fine. Then use this on a higher time frame. Use the same thing on a higher time frame and stay in longer. I'm just showing you on a 1 minute because it makes your trade that much more. You see the model appearing in front of you, and this will work on any time frame, just so you know. So when you see this closing now, see there's even this little probe above. Good indication I want to come all the way back up here. So model 4 is done. You've paid. There's no model 1 in here right now because there's no SIBI here. So we have to rely on this old SIBI back here. It was an inversion. Now it's a reclaimed SIBI. So now we see how we closed above it, come back into it. Now I want to see that go higher. So now I'm break even. I'm sitting right here. And I'm out. Just came back and tagged me. I want to see this go higher inside here now. Now the fact that it's come back and tagged that's all I want to see, and then send it higher. So when it starts to bounce around and not act the way you want it to, look for this candle right here. We have not closed above that one, so look for a retest of this one and see. I want to see a portion of this stay open now. In there again. So I want to see that continue pushing higher into here. Now that if we close above here, watch this whole candle here to provide support. Ooh. Good thing I moved to break even right away. Smash. Okay. Welcome to, what the hell is that? That's 11 minutes after. Oh man, I'm so glad I took that right up tight with that. Came back and just clipped me, but wow, that was crazy. All right. So we are going lower. And we've got equal lows, relative equal lows below us. Oh, look at that. That's a quick model 4 right there. See how it traded just close below that candle, then quickly tagged it and shot off. I wouldn't have caught that either. I just see it now. Like, look at that. Just open, quick tag, off you go. Wait. You have to wait now. If you're not on this, then you gotta wait. Wait for 351. Oh, we've tagged 351 already. Now you're looking for 301. And if you're looking on the hourly chart, look at the hourly chart here and tell me this isn't a box-to-box trade. Here's your premium. We traded below it. Trade back into it. Now if you're going box to box, where's your box? Down here. So you're looking for this on the hourly. As my, like, my bottom. So you're looking for this area down in here. Now, anybody else, if that's your hourly box to box you're looking for, you want to see a retracement back into here to come lower. Or institutional order flow entry drill. Now you wait for my 7:30, which is your 9:30 for New York. $15. Is that into the rejection already? Nope. This one's done. $293 puts you right in there on the discount box. So that would be your hourly box right here. Box to box. How was your weekend, you guys? How was the weekend, Hadi? Family's okay? It was great. Excellent. That's what I like to hear. How about you, Hans? How's everything over there in Europe? In Europe? Nice weather. Yeah, everything's perfect. I love it. Love to hear it, man. Manitoba was nuts. Temperature was really, really great there. And it's raining like crazy here. I come back, it's pouring down. I filled my rain barrels all in one night. They're all filled now, so now I got to find a way to redirect all the water away from the house. We're still raining. We got rain for a couple of days here now, I guess. We needed it really bad, though. See if we can't get a little higher here. How's everything over with you, Hans? Look at these terrible wicks going on here in S&P. Just brutal rippers. Look at that big thing. Holy cow. Instant rebalance. That's nice. Treat this like a fair value gap now. And We had a lovely weekend, Darren. We have lovely weather and it's wonderful. Oh, that's what I love to hear, man. Everybody's having a grand old time. Weather's great. It's good. That's what I like to hear. Now I want to see this go higher from here. I'm just going to sit on the bottom of that. It's got to sit right there. Ideally, I want to see that just keep leaving right from the mean threshold there. But come back and fill it. That's fine. And then the line in the sand is where I've got my stop loss right now, which is sitting right on that mean threshold. I could come down, pop, take me out, and then still go higher. But I don't want to see it drift past here. Now stop loss is going to sit right on that thing. I don't want to see it go lower than that. If we come back and revisit this, then we're looking for this mean threshold now. Yeah, we're still going lower now. Now I want to see this used as support before that low gets taken out. It'll be a model 3. Yeah. Yeah, if we take out that discount box down there on the hourly at 265 to 239, then we've got a really big run today. There's the retest. Should have taken that. Now my stop loss will go up there. Get yourself one there. Use your stop loss to break even. This could quite easily come back and take you out though. Lovely. That's your model 3. No, model 4s. It'll come back either we don't want to see a nice little fair value gap form below us here, right there, and don't come back and fill it in. Just kind of leave it open, pop around down here a little bit, then come back one time, give us an institutional order flow entry drill, and continue going lower. So if you all I got here is I was looking for that to go higher, right, and it came back and took me out, then you're just paid for some new information to go lower. There's your institutional order flow entry drill. There's the fair value gap. Now you want to see this keep pushing lower now. Now I want to see that stay open. I'm going to put my stop loss there. And yeah, I'm chasing it down a bit, but I want to make sure it doesn't come back against me. We still got 4 more minutes for the open. We lose that mean threshold of that candle now, which you just did. It'll take me out now, so I'm going to close that out. We're too close to 9:30 now, so I'm just going to wait. This could be just a hammer straight down. On a 15-minute, I'd like to see that open the next 1 minute just to see that come back, give us an institutional order flow entry drill, send it back up through here. But then we've got a reverse here, here. We've got a premium up here, so this is a small little range here. So watch to see if we get a retest of this area, send it back through this first candle to your left, see if that supports it to run to the premium. So you got 3 different areas you want to look at to see if there's any continuation, or this opens up and just slams it. You just wait for your ideal setup. Where'd Russell go today? Is Russell on the other channel? Yeah, Russell's in the community chat. So there's the run above. Watch this level. If we close above that, or if we just coming back and tag this, now you want to see it go higher. Internal range, box to box, 50%. Pull your fib from low to high. Model 1. Oops. The fact you're even popping through this, don't like it. If it closes below here, wait for a retest and then go lower. Wait for the candle to close. If your stop loss was sitting here and you get tagged beforehand, okay, right there, you're out. You want to see a retest of this little zone right here now. Right there. And you want to see it roll over and go lower. The fact that it's starting to trade through it again, don't like it. So this is when you get this first opening, candles just chopping back and forth. You want something that's going to be very precise, very clean. So it just came back, swept the lows one more time. Watch this candle here. If we don't close above that, we're back to looking at, do we close above here, which we did. Look for a retest right there. Little tap. Now send it higher and through here. Bull traps right here. We swept that low, so that was a nasty little candle that came back through the level we didn't want to see it get through. Tagged the low, went back through it again, closed above it, tagged it. Now you want to see it go higher. So you can see how it flip-flops back and forth. And it's right on the open, so it makes for a very messy price action. You want to see something clean for sure. NQ did not do that. See how the NQ went? Here's the low, there's the SIBI. You traded above it, you came back inside it multiple times, but not trade through it. Not like ES. ES went right back through it. NQ did not. It went here, tagged it, and then went higher. Took out the high, pay yourself. Move to break even. That is what we're looking for right here. That's what we're looking for. But in NQ, it performed. In ES, it did not. Box to box, box to box is where you're looking for, or breaker, or 50%, 62%. If you're using your take profit model, 1, here's where you'd be. So you entered in here, 50%, pay yourself. There's a big chunk there. Take yourself, pay yourself. 50% is off, moves your stop loss to break even plus the cost of the trade. Then you're looking at this area right here. You pay yourself at the high, or wait, you hit 62%, now move to 50. You hit 70%, move to 62 right there. And you notice how it ran all the way up to 79. So you would have chased that all the way up right there. You would have had 80% of your trade would have been off right there and would have came back and took you out. So you'd be done. Internal range liquidity over, wait for your next setup. And you got all that run from there to there. So that's let's say 317 to 420, so 100 handles. That's a lot. 100 handles, you're done for the day. Now I want to see if this holds right here, or we can come back into this little premium area right here and then send that higher. Excellent. I'm in right off of here. I'm right into break even already, plus the cost of the trade, and it just took me out there, so I'm good. Came back and took me out. Looking for this premium box again now. As soon as it tags the premium, you're already into it right here. That's your premium box. Remove that. This is the box right here. So you're already inside it, done and dusted. Move to the sidelines. That's box to box, model 2. Again, brought to you by a Boom. So now here's a retest of the next SIBI. Send it higher. I want to see us break this now. Because you're so high up in the premium, I'd wait for this to break. And then you take yourself a model 3 or 4. No, Russell, that's not looking short. So there's your premium box. We're just waiting for that now to turn into our model 3 and 4. See how you hit this first one or this next one? We have our model 1, change in direction, model 2, continuation, inside the range, model 3, breakthrough, but don't take the high. There's the tag of the high of that BISI. And you want to see it pop through here. 3 will probably go straight through here, and then wait for a 4 to come back, revisit this whole area plus the high, and reach for the next target. If that holds and comes back below this candle, then I'm looking for a little market structure shift, and there's not a lot in here to bounce off of, so I'll be looking for this candle here. Otherwise, looking for it to continue going higher now. There's the continuation, or sorry, the finish. Now I want to see this close above here and look for a model 4. It did not close above there. It just swept those highs. So wait, if this closes back below here, then I'm looking for this to provide support and keep coming lower. Watch this mean threshold of that candle. There's multiple little data points in here you got to keep your eye on. 15-minute charts just coming back and filling. Ooh, that's where it's, let me see that. Yes, immediate rebalance right here. Treat that like a fair value gap. So that's the no-go zone. We just came back and filled it perfectly right there. Now you want to see if that comes lower from here. So you don't want to see it close above here, Hadi, in the next 5 minutes. You don't want to see us start closing through this mean threshold for sure. So that right there should be the high of that candle. And we want to see this roll over and come lower. If it doesn't, then we've got a new 15-minute SIBI that's formed. And now we could come all the way down into this candle's high, all the way down to 347, and then still go higher. So that's a nice little change spot. Now I want to see this roll off of here and start pushing lower. No body below here yet. So be careful, Hadi. This could be just another push higher. Don't jump on it just yet. Just wait. This is a nice retest. So we want to see that hold. So your stop loss is going to be like really tight. You want to see that exit from here. But we haven't closed below here. So I'm not convinced yet, just yet, that that's not a little pop higher. So wait till you get below here now. Watch right here. That's holding. So you'd be careful you don't jump the gun too soon. We wanted to see this close below here. Great, come back, tag it, and go lower. It did, went lower, then came back up and stopped right here, which is not what you want to see. You want to see it continue to close below that candle. It has not closed below there. And now it's coming back again. So this could just simply be another little run higher after taking this SIBI here, coming back into it and running higher. So this looks like the potential for this to close above here, and then you're hunting all this again. And it's the 15 minutes got a big SIBI in there. So 5 minute has already showed you that it wants to go higher. So now I'm bullish on this because 5 minutes showing you higher. 15 minute is about to show you in the next 35 seconds whether or not it closes above that or not. All the time the 5 minute and the 1 minute are still showing you bullishness. This is just confirmed bullishness if we can get above here and use this breaker as support to continue pushing higher. So just wait 17 seconds. I know some of you guys are short there. Who's short there? Oh, you're short hoodie. Well, yeah, we'll wait. Smart move. If it goes short, don't beat yourself up over it. This is holding. But the 5 minutes still showing you, man, that that wants to go up. Good morning, Derek. How you doing, buddy? It's the B Master D. How's the bees, man? How's your sweet honey? There's a retest, that little imbalance right there. Now bring it lower or close above here. But I like that. Bring it lower from there. Doing well so far. Had some queen issues, but they are recovering. Queen issues. What's going on? See, this constant retesting of this box, not good. See how we're not making any major progress lower? That did not continue going lower. It's going chopping up now, taking this little highs here in the rejection block. Now, come on, bring it down. I have no commitment to either way. I'm not in any trade here. I'm just going to watch this for a bit because this is not clean for me. 5 minutes showing me bullish. 15 minute is hovering over potential run bullish, but still has the potential to come back to 385, which is the bottom of that 5 minute one more time. But it's got to close there in 12 minutes above that. So 5 is going high. 1 minute is still going higher, and now we've broken this. Wait and watch to see if this now closes above here. I'm liking the equal highs relative. Yes, I agree with you. I like those too. That's the target. Okay, so now we're closed above it. Just come back, give it a little kiss right there. Delish. Oh, did not close above here yet. That's why you don't trust it, man. As soon as it takes out that high, I've only got one on there, so you got to move to stop loss to break even quick. There's that retest of that little area there. Now send it higher. Don't like the wick. I'm going to wait. I'm going to wait. So you got this little high taken, and you got a little bissy right here. So now this now becomes my little area of interest. If we can close below that, then I'm looking for this to run back lower. That was all we needed, a little pump up to this breaker, and then run it down. I'd like to have seen that premium box get hit, but we have not closed above this level. We just wicked above it, hit a breaker, reversing, changing direction. Now you want to see this market structure shift. So before you commit to this, you want to see this structure break, and then with a nice little displacement candle down. Give it a fair value gap, come back, retest this with the next candle, and then send it lower. This is box to box, here to here. There's your premium. That's hit right on the money, perfectly filled, done. Now it's rejecting off of that. So now if we see this start to peel back through here, we still have not got the break, the bull trap taken out. We traded above it into the premium. You're done. Wait for this premium and this breaker or bull trap to find some support to continue pushing for their equal highs above you. Mean threshold of this last down close candle right here, or the previous down close candle. See how we traded through this, traded back into it. Now you want to see this keep coming lower or trade above here. This is too choppy for me to play in, so I'm going to wait. Wait for something clean. 10 o'clock maybe. Or wait for the macro. This is the macro about to start, or it's in the macro right now. So far that's showing you want to go lower. Look for this low here, rejection block. If you hit rejection block, you've only got one on there. At least move it to break even. This is all consolidating, so that could just come down, bounce, and then come back up and take you out right there. So pay yourself there. If it keeps taking off, then you move to break even now. And now you want to see this keep rocking it down. So you're at break even, plus the cost of the trade. You've paid yourself a portion here. Look at 50% of this range. If it comes back and takes you out, you'll be wishing that you paid yourself at the rejection block. Look at these two stabs up here trying to get up there. It just keeps getting rejected right off that mean threshold of that last up close candle. It's saying, nope, you're not going any higher. If we send it back through here, then this becomes the no-go zone for continuation on the downside. So that's good. Now we've traded below that level. Now I want to see us trade back into it. Right there. And then let's see that go lower. Stop loss will have to go up. Oops. Stop loss will have to go up above. It has to go back above there. As soon as it hits that 50%, we'll move that to break even again. So this is like a Model 2. Now it's got to keep coming down from here. I don't want to see it go back up through that. Take the low. Now I'm at break even. Now let it run. I've only got one on there, so you got to make sure you always pay yourself at the next low, or at least move to break even, and see if it just runs from here. So now keep in mind you're into this order block's mean threshold as well, so that can be a zone to pay yourself at, rejection block. Now this is just going to come back and tag that, so we'll let it sit in there now, see if that runs. So I now want to see that this close through here. Don't forget you've got this old bull trap that we're revisiting again. So I want to see it eat through the mean threshold of that candle, and I want to see this get closed out down in here. This would be nice to leave it open as a portion, as a continuation or a pressure, what do they call that? I'm just drawing a blank. You know, when you leave a portion open, that's it. Now I'm going to let that sit right there. I want to see this hold now. I want to see us close below here. And we're in that 50% range right now, right? So I'm moving to 50. Just hit 62. I've only got one on. There's 62. Take a portion off. Now I'm going to shuffle this little fella down into, I just want to see it tag that right there. Leave that portion open right there. Bink. Now go back down. If not, it's come back and take me out, and I'm good with that. There. Now, if it reaches 70%, we have an optimum trade entry reversal. And that's how you do a model 2 using a model 1. All right, that's it. And I guess that paid off. There's 70% there, 62. So had I just followed the rules and left it at 50, 62%, hit 70, would have been at 62, and it would have taken me out at 62 instead of just above me there. But you understand the rules. There's a 70% optimum trade entry reversal. So if we're looking for this to turn around now, you're looking for it to start to move back up. So you want to see this candle get taken to the upside and then start looking for those equal highs above you again. If it closes through the discount box, All right, so there's the discount box. Do you see it? Model 2, box to box, done and done. So yeah, I showed you Model 1 on the way down. So Model 2 is box to box. Model 3, what's Model 3? Anybody remember what Model 3 is? Who jumped the gun there? Did any of you jump the gun and say, oh, it's going lower? We did not close below it. So we can come back inside this small little range here now. We close back above here, find support, look for a run back inside that whole range to 50%. You want to see this close below here. There you go. It's 13 seconds. There, just close below it now. Now if it closes back above that, there's the change in direction after sweeping this small little sweep here. So it looks like it wants to go lower. It's definitely broken this 5-minute zone right there. See how that we traded back through it, came back at the 5-minute, tagged it, and then sent it lower. So that's what we're looking for right here. I want to see 10 o'clock take this out and then see us reverse this. What is ES up to? ES is down to its discount box. Now it's reversing. So you want to see ES close above these equal highs here and send that up higher, which is going to force this guy to start to make a move higher. So there's the retest. Again, now you want to see that go higher from here. Too much chop for me. It's looking good. Now I'm looking bullish right now inside this range. Until we close below here, I'm back inside that range bullish. So you want to see it's close below here. Come back, tag it one more time. This feels like it just wants, if it's going to run, it's going to shoot right through here. This has been waffling here too much. 1, 2. There's the top of the second no-go zone right there. Just clipped it. Yeah, that could be the down from there. Just wait. Come back, give a little pop. I'm not going to give it a chance to come back in here now. It's got to leave from here. I don't even want it coming back in there, so I just instantly go to break even because I don't want to see that, revisit that. You've done your thing in here, time to leave. As soon as it hits that low, you take one off at the low there if you have more than one on. I guess I'm out of there. See that? It's sitting right there, equal lows now. They'll say, oh, I'll come back and get those later. What do we got? A retest. What's a 5-minute one? 5 minute 440, 344. We could run all the way back up into here. That did not take that one there. That was 385. And this one was 383. So look for higher. Look for a retest of this area right here. Or this area right here. If we close above this, again, we're back into Derek's idea of wanting to go higher. We've got a change in direction right here. So retest this, come back into it. This is good. Give that a retest there and then send that higher. That going higher now. I want to see that hold. Let me put my stop right there. It's got to go from here. Good morning, Paulette. How are you? I missed you too. Hope you're well. Now I want to see this. Just tag this top of this candle all the way to the open of that candle, no more than the mean threshold, and just send it higher. I'll wait for that candle to close. Nobody told me what Model 3 was. This looks like an afternoon, like a lunchtime jam. Look for it to come back and retake this thing for lunch hour, I think. Now, if you're doing a model, take profit model 1 again. If you're following along, take profit model 1 will be right there. Boom. Pay yourself. I'm going to move to here. I'm already way above break even anyway. So there's a slight bull candle there. We've come back, tagged it. Let's just keep going. Yes, that's a nice lunchtime revisit for sure. If we're going to bring this lower, then that's leaving that in place for 11 o'clock or 12 o'clock, because there's no 10 o'clock low there. I think the low of that candle is 291.50. This is 292. So we have not taken the low yet. So that's just put a nice little, okay, that puts me out there now. Maybe we'll come back and take it out now. We've hit the 50%. That's pay yourself there. If it comes back and takes you out, look at this one right here. Yep, we're revisiting this SIBI, which we just hit right there on a 10 candle. So that would be a nice little potential low. I'd like to see that go up higher from here. Remember that candle there? I want to see it the high or the open. Look at that, right on the high. Send it up now. I don't want to see more than half that wick. That's a buy. I'll see if I can see that. No, I don't want to see that more than that mean threshold. If that closes below here, then I'm on the wrong side of this, inside this internal range, and there's nothing else here except for this first bull trap. And I'm sitting right on the candle's open. Or sorry, it's closed here. So I want to see that keep launching higher. So as soon as it takes that high there, I'll move to break even. Or the rejection block. I'll just move to break even right there. Okay. It's playing silly buggers on me. This the reason I'm cautious is because this here, we're so close to having this as a reversal. So I want it, that's why I'm pulling everything tight, just because I don't want to, I'm between here and here right now. So in case you're wondering why I'm pulling stop loss so quick, the potential is for us to close below here, then I'm on the wrong side of it, and I don't want to be on the wrong side of it. So unless all this wick action, it's not clean. So, and we still don't have a low set for the morning yet. We've just got equal lows. So if we come back one more time, pop through here, and then send it higher, maybe. We've got lows below us. We got highs above us. That premium hasn't been hit yet. And we have a new 5-minute that has not turned its SIBI into an inversion for us to go higher. And we're already in the premium portion of this already, so I'm kind of stuck. Let's see this create another leg higher here. So see how we've come down to that last bull trap? Came down to it, hit it. And we came down inside the bear trap. So the bear trapped you for a long, the bull trap came back, you tagged that for the solid for continuation. So you can see how you can argue both directions here, right? This one supports going higher, and this one we are looking for, did we close below there? We did not. So now we're looking for, did we close above that level? We did. Now retest it. Good. Now send it higher. That's a buy. Now I'll put my stop loss right below that low because we've been down here. I don't need to come down here again. If it starts to muck around in here, it's too choppy. Move to the sidelines and wait. Now I want to see this act as support. Now that we've closed above it, I want to see that act like support. Now send it up. Quit dicking around here. Now that's it. It's come down here once, twice, a whole bunch of times. Get the hell out of Dodge or I'm out of here. I'm done this trade. Nope. So now you can just sit there and wait. So just so you can see where the waffling is beginning here. That's the premium. And see how it's just the bodies that have not closed below it yet? That's what we're looking for. Bastard, look at that. That wick did the damage, just enough to take me out. But we did not have a body close below that candle. You see that? That zone still stayed intact. Wicks did some damage, and now you'd be like laughing. Now you got to bring that break to break even. So that's what you get when you muck around with your stop loss. Just follow the rules. Wait for the candle to finish closing. It closed and it's still in there. All of a sudden it took off. Cleared you out. Now look for a retest. Now you want to see this go higher from here. It's above this candle here now. Now I have to be below here. If this starts running all the way back through here again, we already hit the 62%, so that's the potential for optimum trade entry for a reversal, for a continuation. If it takes this out on the downside, I've just paid more information for more information. Otherwise, I'm looking for this to start reaching for this premium box above us again now. So the next bull trap we're bouncing off of is right here, and it's mean threshold. So I want to see this really start to drive through this candle here now. Reach for that premium box. So the next premium above us is right up here. That's not good. This has to hold for me now. It's got to go all the way. You can come back and use this. As soon as it takes that high there, you pay yourself. You can come back and use the high, half that wick, and the open. That's it. I don't want to see it come back to the mean threshold, which it could, but actually I'm going to chase it up one at the bottom of each now. Just because I took a small loss there, so I'm going to recoup that and see if we can reach for our box-to-box trade. So I want to see it close above here and close above there. We've just swept that candle's high right there. So chances are it's going to come back and take me out. What the hell? Let's leave that open on there. Let's wait for a revisit of that. We're at risk free, so we'll see if it works. I'll be right back. Okay, so it didn't get us no close above that candle, hey? Not yet, Derek. Not yet. We're below this level. Now you're bearish inside. This is just mess here. So unless we break through this old premium, I'm stuck between this premium and this premium here now. This old premium and the new one. Oh yeah, okay. Traded through it, came back through the mean threshold of that candle, all the way back down into a discount box. Run back up, then use it, support it. I want to see that go back through here now. I don't want to see more than half that wick, but that's just 373. Right where it just tagged, 373. That's got to be the low of it. It's got to go higher from here. Let's watch this. You may get your going higher right here, Derek. I want to see that 373 hold. Stop loss will go just below the bottom of it. Send it out. That's something I haven't shared with you guys yet, but I want to share it with you now. When you see a bull trap get taken on the down, its mean threshold taken on the downside, if you come back and revisit it again, look for its mean threshold to hold. That's why I said 373 to hold. It held. Now I want to see it start to go higher. Look at that, came back and did not take me out. It poked it, but the spread kept me out. Which means when that finally takes it, it should be like zeroed out. I'm going to close that. It's coming back too far. I'll wait for this to close back through here now. See if that 373 or half that wick. That should hold right there. Half that wick. Nope. Nope. We're looking for this to go lower, man. Sorry, Derek. Close through here. On a close. Came back. Tagged it. Send it lower. Through this mean threshold here now. You gotta wait. You gotta wait for market structure shift here or up here now. Look at that. You went all the way through it, came back, filled the bottom of it, then the middle of it. The bodies respect the middle, then the high of it. Retest, send that higher. I like that going higher now. This mean threshold, this right to here, 384. Let's Put another one on there. Send it up. Yeah, but nothing is clear to me today, so I can't get in when I think it should go. It does not, yeah. We're just staying on the horse here. It does, I agree with you, Derek. It's jumping around like crazy. This is a spinning horse. You got to be super nimble for your trades here. I'm going to sit right on that candle's low now. Take out the high, move to break even. There you go. It's mean thresholds where I want. That'll come back and tag that. That'll come back and get me. Tag that order block and then go higher. Right there. Go higher now. Let's reach for it. This is some trade I'm going to hate. Yeah, I agree. It's super choppy, man. It's not super clean price action, that's for sure. $410 hold. You're going to send it higher. Send it higher from there. If not, I think we've hit the edge of our premium box, have we not? Nope, just shy of it. Lambo, how's it going, buddy? How's the house coming along? Are you all ready to get back into that thing now? What's it been, like a couple of years already? Trying to rebuild that after the last hurricane? Craziness. Just give me the premium already. Back in and permits finally closed last week. Oh my God, man, I'm happy for you. There's lots of good news today. Everybody's having a good weekend. Lambo's back in his house. They cleared that big tree out of the backyard, I gather. That must have been some good firewood. Holy smokes, that thing was huge. Oh, was it really? Was it all chewed up and rotted? Yeah, the thing about soft pie, like soft firewood, is you burn through it so quick. Not looking good for the Bulls. This is choppy. Let's see if there's something in gold. Was there something in delicious in gold? Ooh, goodness. Gold is shit as well. This is not the time to trade this, you guys. If you're like nibbling at it, we've been able to nibble some trades out of this morning, but she's feisty. Indeed, feisty. This is the example. I've given you guys this example before. Here's the entry on oil this morning. If you take your discount box here, and there's 12 people in here, I want you all to see this. If we trade above it, trade back into it, you get long. Easy to see after the fact, but this is exactly the model I'm showing you every morning. You have equal lows here, shows you a reversal right there, come back into it, you go long there, and you put your stop loss below the low. As soon as it takes out this high, watch this candle, this big candle here. This is what you guys have to keep an eye on. When you have one big candle running up and you go, the first bull candle to the left I look for is my bull trap. You see how it ran all the way through that bull trap? I'm looking for it to come back and retest the bull trap unless this candle continues to run higher. If it takes out the next bull trap above it, that's the one you look for. If it takes out the next bull trap above it, that's the one you look for. And it's still climbing. And if it takes out the next bull trap above it, that's the one you look for. And then it takes out the next one, and then the next one. See how it closes above them? And then it closes above that one there. But you notice how it does not close above that one? It closes above this one. So when you're looking and you're saying to yourself, all right, so I saw it run up above the high, but it did not close above the high. It's where it closes. The last one it closes above is the one that you're most interested in. So look at the last one it closed through. Right, if you draw that line across, say it closed above this candle's high right here. Now extend it to the right, comes back, retests it. That's what we're looking for. You do not want to see that mean threshold get closed below. Your stop loss will sit below the low of that, and there's also a SIBI sitting right there. Little tiny, it's a little tiny one right there. Anyway, you're still sitting below it. And then if you're wrong and it comes back all the way through, then forget that. Look for the nearest downcut side SIBI, which is this guy. If it eats through that, use that as support to continue coming back into the range here. But that's typically what you look for, is that one candle that runs like a takeaway candle. People want to chase it. Don't chase it till it comes back and gives you access to the candle, the last bull trap that it crossed, it closed above. Then you can get a long there. So that's where your long is. As soon as it takes the high, move your break even, pay yourself a portion here, and then use your model. In this case, you'll have to use model 3. Model 3. Or, yeah, model 3 is what you're looking for there. And you'd still be in that if you're in a model 3. Throwing gold. A lot of people don't see it though, Lambo. They still think it's a bunch of crap. But I've explained that bull candle to you guys lots of times. Those who people want to chase it too soon. Wait for your ideal entry and you'll see that. Go back through your charts. You'll see that big bold candle. And if each one, and you have to understand the bull traps, you have to understand the SIBIs, you have to understand the discount boxes and the premium boxes and see which one of those it gets taken out. If you don't understand the other side, you won't understand what it's taken out and then what it's coming back to and where the fail safes. You got to put your fail safes in there. And if you don't understand all that stuff, then stick around because you'll get it eventually. See you later, Derek. Have a good time, man. You may get your highs for the day, but it may be just real sloppy all day, buddy. May get up there. Post 4 p.m. so I can enjoy it. Yes. I really want to see this roll over here and take out this low at lunchtime. These equal lows. Just hit the premium and kick off of that and start coming lower. There is at 339, 331 to 331 to 311. That's the volume imbalance down there. It's already been down there today. So it's already tested that. So yeah, it's already tested that volume imbalance. So does it just keep running higher? The 4-hour. Look at the 4-hour chart, you guys. and tell me what you see. Tell me what you see on the 4-hour chart. Where did it come down to? So if you're trying to get a trade off of here and getting frustrated, just read the room, man. The room is just showing you, it's just chopping back forth, making barbed wire, and you don't want to play in this. So I would wait till after lunch now. There's a daily volume imbalance and the 4-hour fair value gap below those relative equal lows. Yes, but what did it come back to, Lambo? Have a look at what's the level it came back to. I'm going to show you right here. And thanks for participating there, Lambo. So you see how this is the premium box right here, from here to here. We traded through it. We're trading back into it now. I want to see this 4-hour roll over and start coming lower and take these lows out here now. But if you look at where this has all come back to this morning, see this mean threshold of this candle right here, this breaker that takes out this high? This candle, its mean threshold is holding price. It came all the way down, hit off that breaker. Its mean threshold started running higher. So if it runs through this premium, this volume imbalance here on the 4-hour on a close at 416, closes that, comes back inside this and finds support at that and pushes higher, we're now inside this whole block here. So if it comes all the way back to there, I'd look for lower time frames to catch a reversal to go higher. If it doesn't, if it literally, this next 3 hours and 10 minutes, there's lots of time here. This runs back up, gives you an institutional order flow entry drill for a rollover, comes all the way back up into this candle's high, which is 35.47. If you hit that, roll over, look for another rollover opportunity to go low and take these out here. So your opportunities are right here. Look for a change in direction. 2, look for a change in direction. Midpoint, change in direction. The bottom of that candle, change in direction. And this candle's open, change in direction. All those are looking for an opportunity. If it keeps going higher, it doesn't give you your reversal, just wait for the next spot. Wait for the next spot. And as soon as you see it and you catch it, and then you might be catching that next 4-hour candle all the way down for 4 hours for a run for these equal lows. And you can stay in that for a long time. So then you look on your 1-hour chart, your 15-minute chart, and your 5-minute chart for that opportunity, or the 1 minute, get the confirmation on the 5, and then continue going lower. Does that make sense? Finally hit the premium box. Look at that. Filled it nicely. Body, mean threshold. Look at that. That consequent encroachment of that premium box. Always so sensitive. Come back inside the little swing. First candle to the left right here. That's bullish. Took this one out. One bull candle. Took this one out. Took this one out. So this is the guy you're looking for. Runs back into it right there and then sends it higher. So now you want to see this close above here and then send that higher too. And this is when Derek goes and plays golf or goes to the pro shop, and then it moves on him. It goes to the direction he was looking for, which is always the annoying thing. So unless we get a body closing above that level, and that mean threshold, consequent encroachment, whatever, I want to see this close and that get taken out now. If that's it, and we get that little run higher inside that 4 hour we're talking about, and it's going to roll over now, here's our first indication, second indication, third, fourth, and then we're going to wait for this downside to get taken on a close. 5 minute, 5 minute. So when that 5 minute right there gets closed below, or here gets closed below, then we're looking for a continuation on the downside. But you'll start to see it 1 up here, 2, 3, all those bear traps. Mean threshold, see that mean threshold, held price. Keep an eye on these bear traps and their mean thresholds. No different than that bear trap I told you about coming back to its mean threshold. Its mean threshold. Those are the things you want to see hold price and then send it higher. Same thing with the bear traps on the other side. Their mean thresholds are important. So once you make a swing, look for the first candle to the left, which is your bear candle, if you're going low, and you wait for that to get taken on the downside. Its mean threshold is the line in the sand. You don't want to see it break it and go higher. If it breaks it and closes below it, then look for that mean threshold to hold price and send it lower. What's your premium array at the top? At the top, I'm looking for this. So if you go to the midnight open, and we're looking at so my target would be like right, where's the open? Right there. That would be my target. Once we get above here, wait for the premium to get taken. Come back, find support at the premium, look for it to run higher like this, right? You want to see this come back, find support at it. Remember, it kept taking us out with the wicks. Ran through, came back one more time inside it. No bodies broke through it, just wicks did some damage. Came back through, ran it higher. Premium, or sorry, this discount SIBI. Ran above it, come back into it, find support at it, run higher. Hit the premium. Now I want to see that same thing. These are the stepping stones for climbing the wall. You know, when Michael talks about climbing walls or the rock climbing, that kind of resonates for me because I live out in the mountains. So it kind of resonates with me that way. And I look at these little holes in the wall where you want to get a foothold on them, and these ledges that you want to find some support at. Get on top of them so you can get some support and keep pushing higher. And you were looking for those as springboards like this. It's like a step, step, step. And you see how we're lining out the step and how important the step is for getting some leverage on it and support on it. Same kind of thing. We're just climbing our way up to the top. Using the 4 trade models I give you should get you there. This is really choppy, so if you've been able to slice and dice some money out of that, good for you. Otherwise, wait for salad days because they're coming. There's plenty of them out there. Sorry, in the dealing range we are looking at. Oh, inside this range, the premium is right here. That's box to box. Here's the discount box. Okay. And I'll change this one down here so you can see it there, Lambo. That's the discount box. And it should say discount box. That's the discount one. And we hit that rate. We traded above it right here. We come back into it, send it higher, and we're aiming for the premium. So box to box inside this dealing range right here. That's box to box. That's model 2. Took a lot to get there. A lot of chop back and forth. If you're a skittish trader like me, I like to make sure I'm really protected all the time. And I demand key levels to find support. Otherwise, my stop gets taken and I move into risk-free real quick because I want to see that level hold. And if it doesn't, great. At least I'm risk-free. See, look at that. Look at that mean threshold, consequent encroachment, whatever you want to call it, right there. It's just not letting you get past it. So that's box to box. That's model 2. Model 1 would have been, you would have been in and out a bunch. You would have been out for sure. 50%, 62%, come back, take you out. So model 1 would have paid you a 50%er. Let's see where it first would have taken you out. So you hit 50% right there. You move to break even, right? So here's your entry right here. It runs up to 50%. Move your stop loss to break even plus the cost of the trade. Take half your trade off. Hit 60%, comes back, takes you out. You're out there. We're done right there. So that's all you would have got out of that small internal range to 62%. That's it. Model 1 would have been done right there. Model 2 takes you right to box if you're willing to hold on to it with the discipline to do that. Model 3 would have been right there. You would have closed out right there. Copy that. Thanks. You're welcome. Coffee's going right through me. Watching for this level to get closed above. See how we haven't closed below this new premium inside this range? We just came back inside it, filled it. Now we're back into that premium above us. Let's go through a couple of other charts here. Let's see what ES is up to. Well, ES looks like it wants to go lower. Five minutes says it wants to go lower. That should start dragging on the 1 minute NASDAQ. That's still filled. I want to see this get broken to the downside now. So ES looks like it's heading on a 5 minute, this 5 minute discount box here. It looks bearish to me right now. If we start closing back up above it, then you're still inside this chop. I want to see that start really smash down now. I know Kevin wants to go down. Let's have a look at the Dow. Premium level, traded through it, trade back to it, tag it. There's your perfect entry, 51,318. Perfect entry for a short. D here is the tree. Was big. Did you get to keep the wood there, Lambo? So Dow Jones give you a nice little reversal there. Nice little Model 1 at 8 o'clock this morning. Give you a huge rundown. Huge rundown there. It's really pretty. Really pretty. High taken. Same thing here. Happens right here. High taken. Right there. Change in direction. Trade below it. You come all the way back up to the very top of it. That's the perfect place I mentioned to you in that other part of the morning, saying if you're on the wrong side of it, the best place to be in is right on the very high of it, right there. So if it trades through it and on a close, you're on the wrong side of it. It literally trades right to it with perfection and then amply leaves with a massive smash through that low. So as soon as it breaks that low, move to break even, pay yourself, and then enjoy the ride. A nice Model 2 there would be perfect. Comes all the way back up to that, does a little bit of wick action, but comes all the way back up again. Perfect continuation on the downside. Model 2, you're still in that. You're in a model, or sorry, Model 3. You're still in this as a Model 3. If it closes there, this candle now in the next 2 minutes closes above that, that's your out. You're out of that trade. That's a Model 3. It just helps you burn it that much quicker. We have a lot of soft wood up here, like pine trees and stuff like that. Pine's very soft. So it burns. It burns good as long as there's no creosote and stuff in there. Usually gotta let it cure for a year or two. Get the creosote out so you can burn it without having your chimney get all gooped. I'd wait for this to break first on the downside, all of this to go, and then run for a deeper run. Look at that ripper. That just said, I'm going to come all the way down to that discount box, from premium to discount, all in one quick wick, and then right back up again. And it didn't close below it. Those are shitty candles when it does that. They just go on a big rip. Silver. Ooh, silver's looking good. If silver takes out this bull trap right here, because you're right up in the bull trap, this silver has a run above the high here. We've come all the way back down and filled it perfectly here and then went higher. So you're looking for the bull trap to close out. So if you're in this right there at the perfect place, again, if you're on the wrong side of it, we should close below it. If it doesn't, then you've got the perfect place to catch the long. So as soon as it takes that high, you move to break even. You should be in a risk-free trade in silver right now, looking for its mean threshold. Take the mean threshold. As soon as it takes that high, pay yourself again and move your stop loss into this SIBI here. You don't want to see this get taken on the downside now. You want to see this SIBI hold, and you want to see this body right here, this candle close above this candle's body in the next 3.5 minutes. And then you want to see that start running higher in silver. I'll even put it in here and we'll come back and revisit it later for you guys. Right there. I want to see that close above there. And you don't want to see it get. So that's the I call it a breaker, but it's not the breaker. There's no break. It did not break anything down here, so it's not a breaker. I'm going to call it the bull trap. It's got to close above the bull trap, and then the next bull trap's above you here. And you want to see this hold. So your discount box will be down here. Right there. And then you're targeting right here. So watch this. No-go zone. You don't want to see it trade back through here on a close. Otherwise, you're in a no-go, and we're going to continue going lower. At least back into here. That's your next no-go zone. Well, it's inside here. So take this whole big zone right here. That's the go, no-go zone right there. So keep your eye on that. I'm looking for silver to go higher the moment we can take this candle out on the upside. I'm looking for that to run higher. This will be a box-to-box trade. If you're in this right now as a long, then pay yourself above the high, move to break even, and aim for your premium box. You got that? Does that make sense to you guys? Let's have a look over here. Little piggies. Little piggy in the street. Motor car sausage meat. There you go. Look at that premium. Hit right into it. Now we're right back inside the bull traps. So either we're going to push back through here, and our line in the sand is going to be right there. That's your lits. Your line in the sand. Lits. If it takes that, look for this. Don't tell me how to live my life, car. Funny. That's beautiful. If you're in Euro this morning and you were following our models and you used our model 1 right here, you were just smashing it right now. Your model 1 and done. You're done for the day. Model 1 right to mean threshold. Or pay yourself, pay yourself, pay yourself if we can get down here. So you want to see this comes back and tags this right here. It's 116,253. Rolls over and goes lower. And you get the next price leg lower. That was a perfect model 1 right there this morning. Such a nice run. Bull trap. Trade above the bull trap right here. You're looking for a retest of the bull trap. 9. Ah, look. Retest. Perfect. Tap. Look for this to break above the high. Comes back into it. Take it. Run higher. Comes back inside it one more time. We're not breaking our bull trap. One more time. Above. Into it. Send it higher. Finally takes the equal highs. And you're up into the next bull trap. Right off a bull trap. Right at 10 o'clock. You want to look for a silver bullet entry. Bing. Silver bullet. That's your run this morning on British pound. Using the Model 1 in banks. This is a bank on a daily chart. Same thing I'm teaching on a 1 minute. There's your imbalance. Trade through it, back inside it. Look at how many times you hit inside it. Internal range liquidity hunt. Hit 50%, pay yourself. Got a chunk of change. It comes back to an old premium. Get a nice little reaction off of that. It trades through. It's swept the lows. Trades through on a close. Comes back in. Does not wait for it to close above here. It hits here. Comes back, tags it. Runs higher. Take the high, pay yourself. Change in direction. We're back into here to here. Inside that internal range there. Traded above it. Open below it. Finally closed above it today. Well, we'll see where that closes today in 4 hours. German. Here's an example where, see how this big bold candle ran through 1, 2, 3 on a close, and then we expect to see it come back within this cluster here, and it ran all the way back through to this one. Hit it, then finally went higher. So it doesn't work 100% of the time, but look how quickly that rebalanced. Finally continue going higher. This should send it higher. Wait for it to break through here. And I want to see German, the DAX. See if we clear this 969. And then look for the bull trap and send that higher. If that just bounces off of here, rolls over and takes this out again, look for this down close candle to act as support. Continue to work on this mean threshold, that mean threshold. Then this one. You got a small discount SIBI down here. So we're now running above that. So I want to see that keep pushing higher now. See how we close back above that level? Found support at it, push higher, wait for this bull trap to get taken. It does right there. Comes back inside it right there and sends it higher. As soon as it takes the high, pay yourself, move to break even, and now let it run. You had a risk-free trade there. You want to see this provide support now. You don't want to see it start trading through here. Market structure shift. There's no SIBI in here. This is the nearest SIBI right here, this discount box. Oh, I suppose there's one right there, which we've already hit. The most clean one is right here. So wait for 11 o'clock now. Oh, already 11:22. So look for these equal highs above you here now. Look for that institutional order flow entry drill on the 4 hour at 5:07. and then look for the 12 o'clock lunch hour reversal after this upside objective we talked about earlier. It was the midnight open. This is a nice little retest of this SIBI over here, this premium box. Look how it came back and hit it. Traded above it, come back, tag it. You want to see it keep going higher now. Highs right here. We're into the rejection block already on that 1 minute, just so you know. This is rejection block right here. We're just tagging into it now. So a lot of times you'll see it come all the way up there. You expect it to go higher and take all this lot out, and it doesn't. It just rejects off the rejection block. Like here, you thought, oh, it's going to come up, hits the rejection block, goes lower. Then it starts to come back up. You go, now it's going to take the highs. Comes back up, rejection block, huge run lower. Then you think, oh, it's going to come back up, rejection block, and then roll over and go lower again. So don't always, that's what I always preach to you guys about. Pay yourself at rejection blocks. Because that's a rejection block, boom. Rejection block, boom. Rejection, rejection. Aptly named, I might say. Now we're into the rejection block one more time. Now you look for, is there going to be a reversal here? Is it going to give us a market structure shift here? Does time and price tell us that that's probably going to be the new high? Usually 12 o'clock sets a high. So we'll see. I hope you are, my friend. I hope you are. I know Derek is. I think I've convinced Derek that rejection blocks are his friend. And that you will always pay yourself there. This may be another great example of said pay point. There's the retest. You're back through it. See if that's going to send you lower now. mean threshold. I want to see that hold price. That starts to eat through this mean threshold. I'm on the wrong side of that. We got one more little pop above. Now, before it takes me out, I'm hoping that it comes back and gives me an opportunity to unload my position. It's got to close above there in the next 4 seconds. My stop loss will go there. And I got to chase this down. Otherwise, it's going to take me out. I'm out. So we're above tap, send it higher, mean threshold. Let's go on higher now. This might be the time this mean threshold or the rejection block actually it's taken now. What time are we sitting at? We should see a crazy Ivan coming in here soon. Oh, someone's calling me here. Off this candle's mean threshold. Take the high. Ooh, look at that, nice run higher. Finally took the highs. There you go. Derek will be happy with that. Look for that midnight open. Yeah. It filled the 4-hour Sibi and Bissy. The 49 is the midnight open. I want to say just tag that, roll over and come lower. So on the 15-minute, what's an upside target? We have all these 594 targets up here above us too. There's the midnight open. So long-term objective hit. If you're aiming for these equal highs above you at 594, that's the next level you want to see get hit. It's that 49 level. 46 level. Now I want to see if it rejects off of here. $570s next. Oh yeah, totally agree. So far that midnight's holding price. We haven't had any closes above that yet. $650 or $562. The top of this is also the middle or the mean threshold of the last up close 4-hour candle. Key area: midnight open range, midnight open first fair value gap, midnight open entry price. So I want to see if this area becomes resistive and we start to push back down lower. Or if we start to get up into that 564, the top of this midnight open range, and see if that creates a reversal. I think that's going to be it for me, you guys. That's my lion's share of the day. I'm done. So this afternoon. If there's something good, I'll be on the Telegram channel for a chat with you guys. If we see something, I'm happy to jump in there and have a chat with you guys. So once again, this morning was fun. A nice little kind of nibble your way up, choppy like crazy. If you managed to make some money out of that today, good on you. It's did a slow grind up, chewing its way up there, but finally hit the objective. At least I was looking for this morning, which was the midnight open. And that's it. I'm done. I hope you guys have had some fun. You got to learn a little bit. And if anything, I will see you guys bright and early tomorrow. As always, thank you too, Lambo. Appreciate your time. Thank you, Hadi. Thanks for tuning in, you guys. And I'll see you guys tomorrow. Thanks again for tuning in. I'll see you guys on the Telegram channel there. Sending the love right back at you. Thanks, everyone. Hit the thumbs up, like, subscribe if you're new. We're here for you. Oh yeah, I've got to remember how to turn this lot off now. Okay, see you guys later.